Good morning, everybody. It's the 21st of September. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mate. All right?
Yeah, not bad. You?
Yeah, not too bad. Not too bad at all.
Good, good. Right, let's get stuck straight in then. So, obviously, a bit of a horrible day for markets yesterday, but back on the front foot again today. Decent little bounce, which we'll come on to shortly. In terms of latest headlines, the UK have said they won't bail out the failed energy companies. The government expects to see some businesses go bankrupt in the coming weeks. Business Secretary has warned that gas prices obviously now at new records, and that we face a long, difficult winter with high energy prices tipping power suppliers into bankruptcy. So not particularly great. Italy set to spend around 3.5 billion euros protecting consumers, while Spain, France, and Greece are acting to stem the hit to their economies. In terms of what's going on with travel, the US will soon allow entry to most foreign air travellers as long as they're fully vaccinated against COVID-19. The policy will take effect in early November. That's according to the White House. So that's good news for of these beleaguered airlines. Looks like Justin Trudeau is poised to win a third term in the snap elections, but falls short of regaining the parliamentary majority he was seeking. That's according to the latest news overnight. With regards to what's going on with Evergrande Group in China, that slid deep in equity and credit markets yesterday, fueling concerns about a broader contagion after the S&P Global Ratings said the developer is on the brink of default, which we touched upon yesterday looking at the charts, which was pretty ugly. So there has been a rally off of the lows that we saw yesterday, both on an intraday basis, and certainly that's continued overnight. So, Steve, let's get stuck into some charts, shall we? Where would you like to begin today? What's caught your eye most?
I'll take a look at cryptocurrencies this morning. I've done a video which will be available on YouTube. Well, it's available on YouTube now if you want to take a look. But watch us first. So, yeah, the one thing that I was really sort of, one candle that really sort of stuck out for me was this candle here. It's a weekly chart and it was formed a couple of weeks ago. It's a bearish outside candle, which is very negative for any chart. And this occurred around about just above the 61.8% fib, 51,030 in the Bitcoin. We saw an indecisive week last week, and then we've had this follow through this week, which we saw basically Sunday, Monday night, saw the sell off based on, I suppose, the impact from global risk conditions worsening, equity markets, and I think there's a lot of investments tied into cryptocurrency. So people were bailing out of that to try and support their stocks and shares across the globe. But we did get a bit of a bounce. So someone came along and saved the day, the Lone Ranger or someone. But we got on the 4-hour chart, we got a bullish hammer formed after breaking support at around about 41,000, and so this gives us a little bit of a potential for to spark a little bit of a recovery. But I think the jury's still out for me. I'm still overall bearish on the cryptocurrency. Looking at Ethereum, that's forming a little bit like a head and shoulders, not a great one on the 4-hour chart, a little bit of a complex one with multiple left shoulders, the head, and this really sharp sell-off move from the 7th of September. Then we got the right shoulder posted, and we're below the neckline really that was formed from this sell-off. We saw a little bit of a bounce from these previous swing highs, forming a bullish hammer again, so retesting the neckline. So it's really sort of really has to sort of push above the 31,500 to negate this negative stance at the moment. Ripple stalled at the 61.8% fib and formed a couple of bullish hammers. So that's broken the previous support from that 7th of September sell-off, but it's holding around there now. So really we've really got to recapture that the ground above sort of like 95 cents for it to ease the worries. Cardano's performing a little bit better, stalled around a 50% fib, 61.8 not touched, and we've got support which hasn't been threatened yet, 187 that comes in at. But yeah, so overall structure looks short-term positive. but over the next couple of days doesn't look great for cryptocurrency. Really needs to get skates on and get moving higher. Potentially with this indice bounce that we're seeing, again, is it a dead cat bounce? I'm not sure yet. I'll take a look at the charts in a second. Looking at crude oil, we've obviously, as I mentioned before, we've got this really evening doji star formation posted on the monthly chart. This is the weekly chart, so it doesn't look so clear on there. There's the monthly chart. That's pretty negative for me, although we have seen a potential to recover this week. It seems to have stalled. $71 trading. Really needs to recapture ground above 73.50. Can't really see it yet. So jury's still out on that. The weekly chart in the gold is a bit messy, but we are in a bit of a bullish flag formation, I think, with potential to project higher to the 2,500 area sometime next year. Still feel that we've got to retest this 1677 swing low, the spike low that we saw, that horrible Sunday night spike low we saw a few weeks ago. Really didn't hang around there for long. I believe we've got to see it on the daily chart a bit clearer. I believe we've got to retest this. We've seen, as you can see, this formation here. This looks like a head and shoulders formation. Neckline coming in around about 1775, 1780. So yeah, bearish flag forming. I'm bearish on gold at the moment as well. 1790 to 1800 for me is the pivot level, so I'm bearish below there and bullish above there, but really I'm more bullish above a break of 1835. I don't think we're going to see it just yet. So yeah, on the back foot for gold, looking to sell into rallies at the moment for a retest of this 1676 level. So indices, trying to make head or tail out of this isn't easy either. So daily chart, we've seen, we obviously saw the big sell-off Friday. The rot didn't stop, and we saw the move lower get down to some decent support levels just above the 68.10 in FTSE, and the reaction higher today has been pretty positive. However, we do look like we're flowing into some decent resistance levels from this upward trending support line, which has been broken. Could get that could be an opportunity to fade this positive move today. Obviously, we've seen this a lot of times before. When we get a really decent sell-off in the indices, they seem to bounce back quite sharply and then carry on higher. But I always live in hope that one day the sort of true value of the market will shine through. That sounds really negative. Sorry about that. But yeah, so anyway, DAX, we were buying a break on this. That's pushed higher. Again, really looking to target a move towards 15,450 to 15,500. And again, potential to look to fade that on a short-term basis. On the Dow Jones, the Dow 30, again, that's looking pretty positive this morning at the moment, and that could follow through into the lunchtime open in the US. Nasdaq as well, not quite as hasn't recovered as quite as much, and it's running into a little bit of resistance now, coming in at 15,183, which was previous resistance, which could come into play again where it's failed before. S&P around about a key level, 4,400. Obviously, these round levels are quite good psychologically wise. This upward trending support, which was broken, we've recaptured ground above it. Really needs to hold on to that on a daily basis for us to ease the worries. Pretty oversold, as you can see on the RSI. Did pretty well in this yesterday. Our analysts were looking to buy dips in the Asian Pacific, well, Aussie 200 and Nikkei overnight, and which sort of like puzzled me a little bit, but they have definitely proved their worth. They were buying dips around about 7,100, just in front of there, and that's reacted really nicely. Looking, they were targeting a move back to 73.30, I think. So that's looking pretty positive on the Aussie 200. China 50, obviously, I've been talking about the 14,500 level for a while now. For me, we break there, we're in huge trouble. It's just found a little bit of support in front of there now. Hang Seng has broken some key support levels. and it looks like it's coming back up to retest. So really looking for this reaction on the retest across all the indices. Nikkei, again, we were buying a dip around about the 29,400. I think the target for this trade was about 30,500. So pretty punchy target, and but it looks like a pretty decent call from our analysts overnight on the Asian Pacific. So well done them. They've done better than I would have done. That's about it on the indices, Joe. Over to the FX.
Lovely, thank you. And well done to the analysts. Some
Yeah.
good calls there. Okay, dollar index. So yesterday rallied right into this resistance level again, this 93.43, which I feel like I've been banging on about for ages. And we pretty much kissed that level yesterday and then posted this shooting star candle right bang on this resistance level. So that's not a great sign. We're backing up with a little bit of a move lower today. So there is potential, I guess, for another move down within this bullish channel. Still, these levels on the upside are the big levels that need to be overcome, 93.43 and 93.43 and 93.73. If we can get above those, then we are looking for an extension higher and a completion of this double bottom pattern that I've been talking about for, again, feels like ages. But still, quite positive on the dollar index despite that shooting star candle yesterday. But there may be a little bit coming off of that, and again, that's due to this bounce in the riskier assets that we've seen. If we look at some of the Aussie markets, Aussie yen, big red candle yesterday. We are trying to bounce back today, but we are within the body of the candle that we posted yesterday, so inside day at the moment. Ultimately, I think any strength is likely to be an opportunity to sell into. So still thinking that we get lower prices there. A big uptick in the volume yesterday as well on the selling, which is indicative of quite a bit of participation on the selling side of things. So we'll wait and see how today pans out. But for me, it's a case of selling into strength still. Aussie dollar, similar sort of situation. It posted a hammer-ish looking candle yesterday, but again, quite big volume on the selling. Still think lower prices will be seen here, but we could see a minor correction in the very short term. Looking at euro US dollar, obviously the flip side of what we've just talked about on the dollar index, it's fallen into this support level here at 1704 and reversed. We aren't really doing an awful lot today. Pretty flat, to be honest, 0.01% higher at the moment. So we're still clinging to these levels. Still of the belief that we are going to get a break eventually of these levels at 117.04 to 116.70, and once we do, I think that will just signal lower prices over the medium term. So still bearish on euro US dollar. Looking at cable, so that continued its sell-off from the short-term trend line. We did have a look above it here, but failed, and we've continued to move lower. Real big red candle yesterday. Yes, we're having a little bit of a go at bouncing back today, up by 0.25%, but nothing to get overly excited about, I don't think, and therefore just probably going to present more opportunities to sell into before an eventual target on the downside at 135.72. So we look at euro sterling. They had a decent move high yesterday. Euro actually playing out as a bit of a safe haven, really, in all the selling yesterday. Big, strong move higher. Got this resistance above 86.20, which would, if invalidated, take out this resistance here and this short-term downtrend line. And then we can maybe start thinking about a corrective move to the upside. But again, the trend remains bearish for me. I know we've seen a big move higher today, but I still fancy lower prices on that one, and we'll be looking to sell probably close to this 86.20 level if seen. That's pretty much it on the FX front.
Nice one, mate.
Okay, so going to the head trades from yesterday. Steve, you went short of China, didn't you? China.
China. Yes, I did. Don't know if it held on for a small win.
Yeah, 39 ticks, 0.39R. So well done on that. Difficult day yesterday because obviously we had the big selling first up in the morning. It was either do you try and catch a bounce or do you go with it? And I got stopped out on oil, although probably just poor placement of the stop really. That did actually bounce in the end, but there was nothing really that happened on China after you got short. It just sort of flattened off. I think there was a holiday yesterday as well, which may not have helped.
Yeah, and that follows through, I think, into today, I think. So I'll avoid that one today.
Yeah, okay. Okay, so yesterday we lost some money overall, but certainly could have been worse. So Steve, what do you fancy today?
No idea, mate.
Okay, do you want me to go then?
If you're ready, Gav, a go. I'm sort of, I feel a little bit the same as yesterday. We've had the decent bounce overnight. I think there's potential for a little bit more on the indices side of things, maybe on the crypto side of things, but I want to sell into it. So my timing of trade, if I didn't have a gun to my head right now, I'd like a gun to my head maybe this afternoon when it sort of like hits those real decent resistance levels, and then
Yeah,
but you can't
that
really
would be good.
choose when you want a gun to. Maybe I wouldn't want a gun to my head. Maybe that's just a figure of speech.
Yeah, I think so. Okay, I'm looking at dollar index. So still fancy this higher. Yes, it has posted this um, shooting star candle yesterday, which this is the hourly chart, which indicates this pullback. But for me, on the shorter term time frame, looks like it could be just a minor consolidation before a push higher. So I put less weight, obviously, on these shorter term charts, but I've got a gun to my head, so I'm going to have a go at it. I'm going to buy at 93.22. Going to put a stop loss at 93.10. Is that? Yeah, and I'm going to target a move back up to the highs that we posted a couple of days back at 93.45 was the intraday high. So looking for just over 2-1 there. Not amazing from a risk reward perspective, but technically it looks okay to me on a very short term basis anyway.
Okay, I'm going to do the opposite to you, I think, Joe.
Go on then.
I just quickly flashed through the forex, and I've sort of like seen a little bit of the negativity in dollar CAD. That ties in with a little bit of oil. My sentiment on the longer term chart, obviously, is for this correction to continue, a little bit of a deeper correction. I think we're going to get, although that goes against everything that I see in the world at the moment. But for me, this hourly chart looks like negative. I know we're running into a little bit of Ichimoku cloud support, but we've just posted a bearish outside candle a few hours ago. This as well, hanging man candle here, and negative on the 4-hour chart. And again, a little bit of support from here. And on the daily chart, it's forming a bearish outside candle, or bearish engulfing candle rather. So yeah, I might go for this. I'll do it on the hourly chart. I'll tell you what, I'll feel a bit better if I hide that's it. And I know I'm sort of selling it at the bottom of the range. It does feel a little bit like that, but I'm just hoping for a little bit of follow through because I'm struggling with everything else. As I say, I think you can get some decent risk reward. I'll take out the high of this candle coming in at 127.75. Let's do 127.80. No, 127.78, 7, so 200 ticks, and I'll look for a nice 3-1 risk reward on here. It's already moved. Did I do that at the right place? I'm sure I did. 127.58. It's just moved 5 points. I might take my profit now. I don't think I'm going to get better than that. No, that's where I'll have my stop. This is where I'll have my target, just in front of this supportive area around here. Looking for dollar CAD to move lower. So it's going against you. Oh, I'm going against you, aren't you? You are buying dollar.
Yeah. Buying dollar index, yeah.
Okay, well, hopefully one of us will nail it.
Let's hope so, hey. Okay, right. So what is due out today? We've got US housing starts and building permits in the US at 1:30. The starts are expected to rise 2% and permits are expected to fall 1.8%. But it looks as though all eyes are going to be on the Fed tomorrow and what's going to be on the agenda. So it looks pretty well. Whether or not we can see any follow through ahead of that on the upside, is a risk asset's going to get continued to be bid up ahead of that. Feels a little bit silly, really, to get too bullish into it. But rarely do you get let down by the Fed, I suppose. They always tend to say the right thing, don't they, for the markets?
Yeah, they tend to say whatever they want, and then they influence the markets, maybe.
Yeah, maybe a little bit of that.
Yeah.
Okay, so let's leave it there, Steve. Have a great day, everybody. We'll be back tomorrow on Fed Wednesday, and until then, trade safe, everyone.
Cheers, everyone.
Bye.